Welcome to The Interest. I'm Sarah Wolak. Rather than taking a back seat to Gen Z and millennial buyers, baby boomers are keeping their skin in the home buying game. I got the opportunity to talk to Adam Hubner, a reverse mortgage specialist, about the options for those seniors still perusing the market.
Our main mindset on this is to really look at it as a holistic view and trying to figure out what is the goal of the person.
Even though the baby boomer generation makes up the largest buying pool at 39%, recent research suggests that some of those senior buyers are getting rejected due to their age. That's why Adam Hubner says that it's important for lenders to take a step back and explore why seniors are still entering the market.
Right, you really have to listen and understand kind of what that person is trying to accomplish, and then from there, it's really easy because depending on the product that's designed for, it's just going to make the most sense.
Before co-founding Advantage Reverse, Hubner worked at AAG and specialized in retiree financing. He says he co-founded the company because he recognized that seniors are a distinct buying pool that might not know all their options. And sometimes exploring those options includes having tough conversations.
If somebody just has Social Security income and it's like two people, you kind of got to look at the whole picture because what if one of them passes?
Hubner says a reverse mortgage isn't always the best option. He says that he wants to get an idea of his customers' homeownership goals before predetermining what they want.
If they do say, hey, my goal is to stay here for the rest of my life, then it goes into, okay, tell me a little bit about the house. Is there anything that would make it more comfortable for you?
Hubner says the biggest difference between seniors and younger buyers is wealth. While Gen Zers are accumulating wealth, seniors are trying to make what they have stretch.
Being able to have access to products that help give people liquidity to do this, but then not take away from their cash flow.
You can read more about seniors navigating the housing market at nmpmag.com. For The Interest, I'm Sarah Wolak.
My name is Thomas Hall. I went ahead and used the Southwest AI app, and I put in a difficult loan scenario with some tax returns and everything, and I had somebody else already underwrite it. When it came back, it was almost identical within like a few dollars, and it took about 30 minutes instead of a whole day or two for somebody to analyze that. So, yeah, that AI is going to be the best thing in the whole industry. So stay tuned.
Tuning into our Master the Market segment. So last week, obviously the big story is what's going on with Israel and Hamas and the war that is now in Gaza. So that is a story that provides maybe what they call a safe haven trade into the U.S. dollar and U.S. dollar denominated assets like bonds and mortgage-backed securities. On the other side of the coin, working against us in the bond market, we had some inflation numbers last week, which were a little higher than expected, that unnerved the market. But the bigger story was the debt. Last week, we had a 10-year note auction, a 30-year bond auction that were just dogs. And what that means is that in order for the Treasury to sell bonds, they had to get a higher rate for people to take it. And that's a troubling trend that we have to watch in the weeks and months ahead. The good news is it looks like that the Fed, despite some of the inflation numbers, we're really backing away from any more rate hikes. And part of the reason is because they said long-term rates have already moved higher and is doing the job of the Fed. So it looks like, at least right now, the Fed may be done hiking rates, but this story can and probably will change. Now, this week, there isn't much on the way of economic reports. We got to watch the story unfold in Israel and Gaza. And the piece that we're watching at Mortgage Market Guide real carefully is energy. The last time we had an invasion where Russia went and attacked Ukraine, we watched oil go from 90 to 135 very quickly. And that just changed everything from an inflation perspective. So anyway, I hope you have a great week. There's a lot to track. I hope this finds you well. We'll talk soon. Bye for now.
Vince, I want to talk to you about, if you're a mortgage broker, if you're doing 90% or more of your business with one lender, do you think actually that that's still considered a mortgage broker?
No, I don't.
Okay, so explain to me why.
Okay, listen, we know that retail is, the problem with retail is that although they may get great marketing support, if you're an LO there, you are confined to only doing the products from that one lender that you're at, right?
Not
The
necessarily.
idea,
Okay.
well, but for most retail shops, that's probably the case. They're pretty close to it, right? Most of their stuff, 90% is going to be from that retail shop. Now, if you are sitting here as a mortgage broker, the whole point of it is your power as a mortgage broker is that you can offer clients, a wide array of potential lenders, the ones that fit best. If you're doing 90% of your business with one company, even if they offer multiple products, that's the argument, right? They offer multiple products. But even if they do, so what? You're going to only offer it on their terms. There may be other lenders out there, and there probably are, that maybe have those same guidelines, but maybe a lower rate, or maybe a slightly higher rate, but looser guidelines that are going to make it better for somebody to come in.
Yeah.
Your clients aren't going to know that.
So listen, first off, I'm a huge fan of the mortgage broker,
Of course.
and I love the superpower of having optionality. This is something that you've talked about a lot. I've actually always feel is a great superpower. However, there are certain use cases where you will actually have a certain niche audience, and that certain lender might actually be able to serve that niche audience. Let's say, for instance, you're working with business owners, and those business owners, you need to find a lender that's going to be able to handle your bank statements, and also you want to actually plug into a lender that's got great technology.
I didn't say that you might not put a lot of business with one lender in a certain niche. What I'm saying is,
Still a broker.
I'm saying in a certain niche. If you've got other people across the other way, here's your FHA lender. Here's your FHA clients. Here's your VA. Here's your traditional, borrowers coming through. And each of those, here are the lenders that can make their life better, their financial transaction better. And here's your non-QM lender, or here's your reverse mortgage lender. All that works out great. And if you're saying these are the guys that do this best, that's fine. But you still got this broad panoply of lenders that you're working with. You're not saying, okay, you're going to come to us and every one of those loans is going to go through the same single company. That means you are no longer offering optionality. You're offering one company's products. That makes you a retail shop, even if you call yourself a broker. It makes you captive retail. It's brilliant for the company that's got it's brilliant for the company that's got you doing that for them. Brilliant for them, not great for the consumer, and not great for you to say you're a broker.
They're still a broker.
I don't think. I actually
because
think,
you want.
I would say they do damage.
You can't take your jacket.
I'd say they do damage to the broker community, because if customers go there, if consumers go to them and go, I'm going to broker so I can see options from many different companies, and they only get options from one, then those consumers are all going to think that's the way all brokers work.
But what if your consumer, your target market,
damage to the broker community? That's what I think.
If your target market is actually only synergistic to one lender, hey,
I don't think I don't even know that it is, that you can ever say that. I don't think you can ever say that, because even if it's synergistic to one type of loan, you're only doing self-employed borrowers, so you're doing basically non-QM loans. There's still many non-QM lenders that can work in that space for you. And I think you ought to be looking at working with multiple ones, or at least have that option for everyone, rather than saying, oh, we've picked one and we're going to do that, because you are now a retail branch for that. We are out of time, Andrew. I'm sorry. Fortunately, I said everything that we needed to be said, because you didn't have a real argument. So with that, thank you.
Hold on.
I declare victory.
For more on these and all of today's top stories, go to nationalmortgageprofessional.com.